This video is sponsored by the trading brokerage Moomoo. Use my link down below, deposit $100 with Moomoo, and we each get 5 stocks, and each of those stocks, get this guys, is valued up to $3,500. So get your free money from Moomoo, link down below, and let's get right into the video. How's it going, everybody? It's Stas here. Welcome back to another video. So today, you guys saw the title, right? We got to go over 3 stocks to buy and hold forever. We're talking buy and hold these for life, till you die. I'm not trying to get morbid on you guys, but these are stocks that I truly believe are lifelong stocks. So we have to break down what these companies do, even though you guys probably already know what these companies do, and we're going to break down some metrics. We'll take a look at some charts. So if you all find value, hit the like button, subscribe, join my Patreon if you want all my buys, sells, call outs, morning update videos, plus more. All of that's on Patreon, link down below. And with that being said, let's get into it. So let's start off with stock number 1. Stock number 1 is Costco, ticker symbol COST. And before we even get into these different stocks, guys, understand valuation is very important. And we're going to talk about valuation a little bit more in this video. So keep that at the top of your head. So before we talk about valuation, let's talk a little bit about what Costco does. So this is a little excerpt straight from CNBC's website. Costco Wholesale Corporation is engaged in the operation of membership warehouses in the United States, Puerto Rico, Canada, the United Kingdom, Mexico, Japan, Korea, Australia, Spain, France, Iceland, China, and throughout its subsidiaries in Taiwan. And the company's average warehouse space is approximately 146,000 square feet. So this company is pretty much everywhere. And you guys know what Costco does. They sell bulk groceries, they sell, electronics, they sell everything. Everything that you need or you think that you need, Costco has it for the most part. They even have gas stations attached to, I don't know how many gas stations they have off the top of my head. I don't even know if you guys know that. I don't expect you to know that, but just understand they have gas stations and you do get a bit of a discount on the gas if you are a member of Costco, and they currently have a 213, or they currently are worth about 213 billion. That's their market cap in dollars, and their trailing 12-month price to earnings ratio is currently sitting at a 41. So that is a bit lofty, but we'll talk about that here in a second when it comes to the valuation. And they pay a 0.7% dividend. And for me, guys, I'm not looking at Costco. Yes, they do pay a dividend, but I'm not looking at them necessarily as a dividend company. I'm looking at them more as a dividend growth company, meaning they pay a very small dividend today, but in the future, they're likely going to continue to grow that dividend to the point where they're probably going to be paying 2, 3, maybe 4% down the line. Who knows when, but down the line, that is what I believe, ultimately they will be getting to, as growth starts slowing down and, they pay more money to the shareholders. And when you're looking at stocks, because again, this video is about stocks to buy and hold for life, you want to look at businesses that can operate in any environment. We're talking booming economy, collapsing economy. We're talking about a stagnant economy, right? If nothing's really growing or we're not decelerating either. Costco is a business that has proven time and time again that they can operate through a recession, through good times, bad times, and you guys can see overall, if I pull up the max chart, this company has made it through all of the rough times since it's the available data here, since 1986. Obviously, they've made it through all the rough times, or they wouldn't still be trading publicly here. The company would have went out of business. So in my opinion, Costco is great. You're going to need their products, whether recession, boom, bust, whatever. And going back to that valuation point, they are a little bit overvalued here. Look, just in the past 3 years, guys, Costco's gone from $195 per share. That was back in February of 2019, so about 3 years ago, 3 years prior to me filming this video. So we went from, let's say, $200 for round numbers here, $200 all the way to $570, which is nuts. And I'm not saying that this stock's a bubble or anything, even though it's ran up. It almost did a 3x. I'm not saying it's a bubble, but I'm just saying the 41 trailing 12-month PE it's a little bit hot. It's a little bit hot. I would love to pick up Costco in maybe the 20 to 25 range PE. And full disclosure, I don't own Costco at this point in time. I used to, but I've since sold out of it, and I'm waiting for the right valuation to get back in. But just because I sold out of it and I'm waiting to get back in, it doesn't mean that it's a crap stock and you shouldn't hold it for life. I'm just waiting to get in at a better price, because price is what you pay, value is what you get, right? I want to pay a price where the value is worth it. And for me at this point, we're a little bit too hot. So we're going to be watching Costco here over the next couple of months. If we do end up going down to, let's say, low 400, back into the 300s, that is where I'm going to consider adding a position when it comes to Costco. And who the heck knows if it's even going to get there, guys. I mean, this has been a stock where it pulls back a bit, it gets bought up instantly. At this point, it is down about 15% from all-time highs, so it is in correction territory. We are getting to the 180 SMA on this yearly chart, so maybe we get a bounce here. But again, for me, as a longer-term investor, the way I'm looking at Costco, I want it to come a lot lower. So that is number one, Costco, ticker symbol COST. Number two is Disney, which you guys probably could have guessed Disney was going to be on this list. I mean, where do we start? They have great movies. They have great intellectual property. They have great, this company is ingrained in every little kid's life. And the way that this business works is you get the kids young, right? They're watching Disney, the princesses, all the movies. Heck, I'm a guy, guys, and I was watching all the princess movies growing up. I freaking love Disney, and I still love Disney. That's the point, right? That is the point. And not all Disney movies are princess movies, but all of them. All these movies are great, right? And they have the parks, the cruise lines. Now they have Disney streaming, and they own a lot of other businesses besides that. So the point of this business, in my opinion, is you get the kids young, you get them hooked on the brand, and the brand's great, the experience is great, and then they're going to love the brand for their whole life. Again, I'm in my mid-late 20s right now, right? And I don't really watch many Disney movies, but I still love going to Disney. I still like consuming their products, Disney Plus, all these other products they have and services. So Disney's great. This one's currently down a good chunk. This stock, just on Friday, the day prior to me filming this video, the stock went down 7%. So Disney's collapsing. It's falling through the floor. It is down 33% from the recent $200 all-time high. So it's well into bear market territory. And as of now, Disney has a market cap of $250 billion. They don't pay a dividend. If you guys remember, they cut their dividend during the pits of the pandemic. If you guys don't remember that, well, I'm telling you now, that's what they did. They cut their dividend, and their PE is very wonky. It's thrown off. The PE is like an 112 right now because their earnings are all messed up. So I'm not really paying attention to PE for Disney at this point. But just know, guys, I own Disney. My average cost is probably around where we are now, maybe a little more, a little less. I don't check my position every single day. With long-term positions, I check them maybe once a month. So I couldn't tell you exactly what my average cost is, but just know I'm a shareholder, and if we start going down low hundreds, under 100, if that happens, I'd be shocked, but hey, never say never. If we do go down there, I will be buying more Disney because, again, it's a great business. I think long-term, for a buy and hold stock forever, for life, Disney's got to be on the list, at least for me. At least for me. I don't see any other business out there that, at least as of now, is even remotely close to replicating what Disney is doing. And the next one here might be controversial, probably not. Starbucks, SBUX. This is one that I used to own, like Costco, and I sold out of it. Now I'm waiting for a re-entry. Starbucks is a roaster, a marketer, and a retailer of specialty coffee. You guys know this, with operations in approximately 83 markets around the world, and the company has over 32,660 company-operated and licensed stores. Their market cap right now is $112 billion. If this thing gets under $100 billion, that's going to be very valuable in my opinion. And their trailing 12-month PE is a 27. Not too bad. I mean, not too bad considering Starbucks is still growing. I mean, it's not a rapidly growing company like it once was, but it's still growing decently, right? So a 27 PE, not too bad. If it comes a little bit lower, guys, a 20 PE, 22, I will for sure be buying back into Starbucks, and they currently pay just a little bit over a 2% dividend yield, and they are growing the dividend pretty nicely. And over the past couple of months, Starbucks is down 25% from 127 down to about 95. It's down 25%. It's in a bear market. And I believe I used to own, I know I used to own Starbucks, but I believe the price, my average cost was something like $70, $75, and I ended up dumping out of it at about $115, $110, or maybe even higher than that. And in hindsight, that's a great move. I mean, now we're down a lot more from where I sold out of it. And again, I'm looking for that re-entry because in my opinion, Starbucks, it might be controversial. You guys might think, oh, Starbucks, it's a fad. I mean, there's no way it's a fad. But you might think, oh, other coffee companies are going to come. But the brand name that Starbucks has built, it's here to last for decades to come, in my personal opinion. And you guys have seen it with McDonald's, right? McDonald's is now a blue chip company, blue chip stock. They're all over the world. Their brand image, their brand, just the value of their brand is massive. And yes, there are a lot of competitors to McDonald's, but they've been around forever. They're a blue chip company. And if you just bought that stock 30, 40 years ago, McDonald's, and you held it, I mean, you're doing very well. Very, very well. And I believe Starbucks, that's what it's going to be. It's going to be the McDonald's of coffee. It's probably already that. It's already that. They're all over the world. They pay a nice dividend. And as that PE gets lower, I'm getting more and more interested. And I just realized my ThinkOrSwim is messing up right now yet again. So let me see if I can fix this, guys, and we'll continue the video. So that's pretty much it. Costco, Disney, Starbucks, those are three that for sure, in my opinion, are going to do very well over the next 10, 20, 30 years, and they're going to be compounding machines, meaning you're going to make a lot of money, in my personal opinion. And as always, I'm not a financial advisor. I'm not somebody that can make decisions for you, but if you do your own research and invest in these companies on your own with your own, investment philosophies, whatever, I think you're going to do pretty well. So if you all stuck till the end here, let's go over one more, which I guess isn't really a stock. It's an ETF, and it's VOO. And you guys might be saying, Stas, come on, that's so boring. VOO, S&P 500 ETF, come on, what the heck? Why don't you just buy GameStop? Why don't you just buy AMC and hold it for life? Well, if you did that, you're probably not going to be too well off in a couple of years. But with VOO, if you're looking at it from a 10, 30, 40, 50 year perspective, simply buying and holding the S&P 500 and continuously buying it has been the way to go, and you've made a lot of money over time. We'll just wrap it up there and leave it at that. Simply buy VOO, and this is something that I'm confident, very confident, even more confident than Costco, Disney, Starbucks, because it's an ETF of 500 companies, or an index of 500 companies, so there's more diversity. It's not like you're putting all your eggs in one basket, so I'm even more confident with the S&P 500 over a lifetime than I am with these stocks, and that's why you got to own it. You got to own it, in my personal opinion. So if you all found value in this video, hit the like button, subscribe, drop me a comment, let me know your thoughts, and make sure to join my Patreon if you want all my buys, sells, call-outs, morning update videos, plus more. All of that's on Patreon, link down below, or you guys can go to StasSurfS.com/Patreon. Make sure to also get your 5 stocks free from Moomoo. All you have to do is use my link, deposit $100, and we each get 5 stocks. And get this, guys, each of these stocks is valued up to $3,500. So get that limited time 5 stocks from Moomoo, link down below. And with that being said, I'll catch you guys in the next video. Thanks for watching. As always, keep crushing the market. Stay safe out there. Peace out.